All right, let's get right into it. Today, we're digging into Kforce's Q4 2025 earnings. And, this one's a bit of a head-scratcher. Management came out sounding pretty upbeat, but the market, well, the market told a completely different story. So we're going to unpack exactly what happened and why.
Okay, so this right here, this slide pretty much says it all. It's really a tale of two tapes. On one side, you have management talking up this big game, calling it the best start since 2022. Sounds great, right? But then, look at the other side. The market's reaction was brutal, an 8.1% drop right at the open. So, the big question is, what did investors see that made them hit the sell button so hard?
To really figure that out, we've got to start where everyone else does, the headline numbers, because that's exactly where this whole confusing picture starts to take shape.
So first up, let's talk about the good stuff, because there was some. Revenue came in at $332 million. And look, that's not just a beat, it's a solid beat. They cleared what the analysts were expecting, and they even flew past their own guidance. So from a top-line perspective, you're thinking, hey, this looks pretty good.
But, and this is a big but, here's where the wheels kind of came off the bus. The GAAP earnings per share, just 30 cents. The street was looking for 47 cents. That's not just a miss, that's a huge miss. And honestly, this one number is probably the biggest reason for that stock drop we saw.
All right, so when you lay it all out like this, it becomes crystal clear. You've got the revenue beat, which is a check in the plus column, but it was totally wiped out by that massive earnings miss. And then, here's the other killer detail. Gross margin dropped by 50 basis points from the last quarter. The market sent a really clear signal here. We don't just care that you're selling more, we care if you're making money doing it. And on that front, they failed the test this quarter.
So, with those numbers, you'd think management would be a bit more cautious, right? Nope. They actually spent most of the earnings call painting a really rosy picture. Let's take a look at the story they wanted to tell. And they came out swinging with this quote right from the call. By focusing on the highest sequential billing day growth in their tech business since 2022, they were basically screaming, hey everyone, the slump is over, the rebound is here.
So the bull case they're laying out really hinges on this idea of an early cycle rebound. What they're saying is companies are starting to spend again, but they're still a little nervous, so they're hiring contractors, flexible talent, before they commit to full-time staff. And Kforce is right there to help. Plus, they're pointing to the whole AI boom, saying these projects are super complex and are going to drive demand for specialists for a long, long time.
Okay, so if management's story is so compelling, why did the stock get hammered? That's the million-dollar question. Let's flip the coin and look at why the market was so skeptical.
And here it is, plain as day. This was the #1 problem for investors. Profitability, or the lack thereof. That 0.5% drop in gross margin from just one quarter to the next, that's a huge red flag. It basically says, yeah, you're bringing in more money, but you're getting less profitable on every dollar you make. That's not a good look.
Now, to be fair, management had a list of reasons for this. They pointed to higher than expected healthcare costs, bigger bonus payouts because they did beat on revenue, and just the usual holiday slowdown. But you know what? For the market, the why didn't really matter as much as the what. And the what was that profits were shrinking.
So at the end of the day, the market's message was loud and clear. Beating on revenue is nice, but it's not enough. Not right now. Investors want to see that growth actually flow down to the bottom line, to real profits. And in Q4, that just wasn't the case for Kforce.
So you've got these two totally different stories, right? Management's bullish turnaround versus the market's deep skepticism. Where do we go from here? Let's look ahead to what's next and give you our take on the stock.
First things first, here's their official guidance for the next quarter. They're guiding for revenue between $324 and $332 million and earnings per share somewhere between 37 and 45 cents. Now, what's really important here is that if you take the middle of that revenue range, it's basically flat compared to last year. That kind of throws some cold water on the whole sharp rebound story, doesn't it?
But management does have an answer for all those profit concerns. They're taking action. They've started a cost-cutting plan that they say will save about $7 million a year. And that's not chump change. It's a real move designed to make the company more profitable down the road. And this really sets up the big debate for Kforce stock right now. If you're a bull, you're saying, look, the revenue turnaround is happening, and with these new cost cuts, profits are going to explode when things really pick up. But if you're a bear, you're shaking your head and saying, I've seen this before. Can they actually prove they can make money off this growth? That's the fundamental question. So, after looking at both sides, we're landing on a rating of market perform for the stock. And here's the thinking behind that. The pickup in revenue? Yeah, that looks real. We believe that's happening. The problem is, we just don't have a clear view on how they get their profits growing again.
The cost savings are great. They put a nice floor under the stock, but we don't see a big reason for the stock to take off in the short term. So we think it'll probably just chug along with the rest of the market until they can prove, without a doubt, that more sales mean more profit. And for that, all eyes are going to be on the gross margin number next quarter.
And just as a final reminder, please remember this is not financial advice.